Inside of this video, we're going to be going over how to identify liquidity. I know a lot of you guys are probably a little bit confused about what liquidity is because there are so many different types of liquidity that exist inside of the market. So before going like super deep into time frames, session-based liquidity, previous day high and lows, I just want to explain to you guys how the market actually moves so you guys can get kind of like an idea. So the market doesn't move left and right like how we see in the charts. Like the market doesn't move left to right. The market moves up and down all day. Up and down. Price just moves up and down between prices. So let's say gold is at 3,298, and let's say that this day is like Monday, and this is the low of the day right here. This is the low of the day. And the high of the day is 3,286. And that's the high of the day. You will literally see gold. Like if we literally pulled up what's called like the depth of market, you will see gold moving back and forth between these prices all day. So when we're trying to understand liquidity, mainly we want to be paying attention to where the highs and lows are at on this chart. Because let's say that this 298 level right here was the higher low of the day. There is bound to be a lot of orders resting under that area of buyers who got in right here. So that's obviously resting liquidity. So now that I've kind of like just explained the concept of liquidity, I know it's probably a little bit confusing, but I have to explain that before going into the different types of liquidity, just so you guys can get a fair idea. So the first type of liquidity that we're going to go over is my favorite type, which is session-based liquidity. So I already have my sessions indicator marked off. The main ones you want to pay attention to is the Asian high and low, the London high and low, and that's it. Especially if you're trading New York. If you trade London, which is like London session is too early for me to trade. But if you trade London, you should be paying attention to the Asian high and low. But I pay attention to the Asian high and low and then the London high and low as well. So during this time period of the London high and low and New York open, a lot of the times we see a sweep of either London high or also London low. On this specific day, we can see that we had a sweep of London low, and then price rejected and then started moving higher. It's different every single day, but a lot of times that's kind of like what happens. You'll see a sweep of session high or session low, and then you'll see a clean rejection. Why? Because those session highs and session lows a lot of the times are the lows and the highs of the day. Like if we see right here, this London session low, this was the low of the day before price came and swept it out. And then what does price do after? It has to return back to where the mean is, right? Price can't just keep falling because that's not how it works. That's not how price works. It always has to return back to the mean. So I'm going to give you guys another example of a similar trade that happened on another day. Once you guys notice too, session-based liquidity, you'll literally be able to look at the market every single day and not like map it out to a T because different things happen, but you'll have a fair idea of where it's probably gonna go. So on this day, we see that we had London low right here. Is very similar to the trade we just went over. We had Asia already getting taken out. We still have, no, we had London highs getting taken out, but Asian highs were still intact. We get a sweep of London low right here. And then what do we see? We see the same thing happen. So it's literally like clockwork. So that's the first type of liquidity anyways. Let's go to the second type of liquidity that you guys probably know about, but probably don't pay too much attention to, is previous day high and previous day's low. So for this, I'm going to go to our daily time frame because that's kind of like the best way I can go over it. A day like this, where we had this huge sweep of the previous day's high. So on gold on this day, we saw that there was a sweep above this high, and then we see a full on rejection. On the daily, as you can see, you see a wick. If you see a wick like this after a sweep of a previous day's high, you can tell that there's a lot of orders behind that move, and price is probably going to reject like crazy. So previous day's highs and previous day's lows are also areas of liquidity where if price taps into one of them, you will low key a lot of times see a, not every time of course, but a lot of times you'll see either a rejection or a full on reversal. But it depends. Other factors that play into this are factors like the trend and things like that. Another previous day high sweep I could show you guys is on this day. I remember this day. This day on gold, this was April 22nd. If we go down to our lower time frame, we see right here that we swept, like literally just a little bit, we swept right below this previous day's low, and then look what happens. Look what happens. Look how powerful this is. We literally kept on running and running and running and running. I remember this day like it was yesterday. So that's previous day's high and previous day lows. So main thing you want to pay attention to is just the overall trend in the market, especially when you're looking at liquidity sweeps. I think a lot of people get messed up when they're trading liquidity because um they don't pay attention to like how the market is moving at the time. They just trade liquidity sweeps anyhow, but they don't add in like higher time frame trend. Is it going with the daily? Like things like that. Things like that are so important when trading sweeps. So the next thing is the 4 hour. I call them 4 hour sweeps. So when we're talking about hourly sweeps, I don't pay attention to them that much, but they kind of work the same way as session based sweeps. So when we're looking at an hourly sweep, we mainly want to see the same type of thing happening, where we want to see a sweep below, like here, a 4 hour candlestick. See how we swept below? There are orders resting below this 4 hour. It also constitutes with the session based. It's kind of the same, but a little bit different. Another day is like this day where we swept below this 4 hour. I'm trying to find some other examples. Another day like this day, we swept below this 4 hour candlestick. You mainly just want to see a candlestick. You want to pay attention to the wick. You want to see a wick that sweeps below another 4 hour candlestick, and then you kind of want to see a rejection based off of that. This is another example. This is another really good example right here. We see that it sweeps below all this liquidity, and then we see a clean rejection back higher. And yeah. So mainly you want to be with the trend, like I'm always talking about. And yeah. So those are the three types of liquidity you want to be paying attention to. The main type that I pay attention to day in, day out is session-based liquidity, but I also look at what the daily is doing as well before getting inside of trades. So I look for getting some type of sweep on the daily too, but I mainly just look at the session and apply my session framework day in and day out. So I hope you guys enjoyed this video. If you guys did, make sure to comment down below and I will get back to you.